Now, Facebook won't officially be a public company for a few months, but it's already starting to feel the heat from investors. Our Cory Johnson is back with us to tell us why. Cory?
Yeah, Emily, the California State Teachers Retirement System, second largest pension fund in the U.S., known as CalSTRS, well, they've got a history of pushing for change in companies over the last few years, and they're focusing on the governance issues at Facebook, where founder Mark Zuckerberg has an overwhelming 57% of the voting power. So joining me to talk about what this might mean for investors in an impending IPO, Cory Mack, co-founder of JMP Securities. So this is a trend recently, but CalSTRS getting involved is also a new trend, but yeah. CalSTRS getting involved in this issue of corporate governance and these super voting power of founders. What does the market make of this when these companies go public like this?
Well, I think it is a concern, and I understand the concern, and I think if you ask most institutional investors, they'd rather not have the supermajority voting control, but it's become pretty much a market norm for especially these recent internet IPOs, where you've seen it with Groupon, you've seen it with Zynga, going all the way back to Google. And it's not that uncommon among other companies as well. So,
well, you say that, but I can't think of a lot of companies that have Class A shares where founders have a different control, unless they're ancient industrials, named after the
Corp and Times and a lot of media companies actually have that. And we've seen it over many years, and it's not that uncommon today. And I think for a company like Facebook, to be honest, I don't think it's going to be a major issue to investors when they go out on the road.
But let's talk, all right. News Corp. I mean, I was in front of a very contentious board meeting just a few months ago where people were up in arms. The New York Times, another company where investors have demanded change and couldn't get it because there was a supermajority of control. Do investors not connect the two? We don't like the way old companies are run when they've got different voting stakes in the shareholders?
Well, I think it's an issue for some of these more mature companies that haven't had as good results. I think right now, with the kind of growth you've seen with recent IPOs from Groupon and Zynga and with Facebook in particular, I think investors are trusting of the fact that these companies have been run well, that they've grown, that they're getting in on the ground floor of future huge growth. And it's just not as big an issue right now to those investors, and they're willing to, it's a free market, they're willing to make that bet.
Let's take a look briefly at those kinds of control that we've seen from these newly public internet companies. And maybe this is a trend that sort of, well, it wasn't a trend when Google did it 10 years ago, but CEO or founder voting power, because the Groupon is three guys with Eric Lexkowski, Brad Keywell, and then Andrew Mason. 58% of the voting power. Facebook looks like they want 57. Zynga succeeding with an IPO at 36. I guess you're right. Some of the old companies they complain about, they don't complain about Berkshire, where the A shares have the voting power and the B shares have
not.
As
long as you do well, I think that they're willing to trust you. But I can understand some of the concern for companies that have retained voting control and haven't performed well.
Now, you guys do a lot of tech banking, and you're very active in Silicon Valley, helping a lot of companies go public. Yeah. What do you think the effect of a Facebook IPO will be?
Well, I really hope a Facebook IPO really draws interest to the overall IPO market, because what we've seen in the last number of years is a real decrease in the number of IPOs in the U.S. market. So I hope it gives visibility to the vibrancy of the U.S. capital markets. I hope it opens up the market for other IPOs. I mean, we saw that back with the Netscape IPO, where it really engendered a huge era of lots of IPOs. We only had 150 U.S. IPOs last year.
Well, let's look at some of these numbers really quickly before we go here. Well, we pulled together a full screen that shows you the number of IPOs filed in the last year were up. But the numbers priced were down year over year, and the numbers withdrawn were up, which says that a lot of people thought they could go public more than ever before, but fewer went public even than the previous year, and even more were withdrawn.
Well, we had a really uncertain equity market environment for the second half of the year, so a lot of companies that were on file just chose to wait. And we're starting to see some of those companies trickle out in the beginning of the year, but we've had really mixed results on those IPOs. So hopefully we'll start to see some of these IPOs work. And Facebook, obviously, is going to be a huge bellwether and a large deal. And so if that works, hopefully there's a coattail effect to other IPOs. We
shall see. Certainly the market for small and mid-caps has been in a crazy tear. But Cory Mack, thank you very much from JMP Securities. Glad to have you on, as always.